After a week that saw some wide swings in the stock market, a lot of investors hoping for a calmer Monday. Right now, the Dow down about 55. With starting off much lower than that negative territory, a lot of people looking for answers, though. Jay Tyner from Semmax Financial Group joins us now with some answers for that. Jay, good afternoon.
Hey, good afternoon.
So a lot of people, kind of sick at their stomachs over last week, the big, down and back and things like that. Is it necessarily a bad sign to start out with that big drop on a Monday?
Well, it is important to be able to watch the markets, but I think we actually have some good news. Before I mention anything about China, I just wanted to say that the U.S. economy is really starting to rip. Inflation is practically dormant right now, and I think the Fed policymakers, they're rather unclear in what they're trying to do. But getting back to China, what I think was missing in last week's wild roller coaster ride was the absence of any flight to safety. And this is important because you really need to have a big negative like that to build a market story. And to be honest with you, I don't think that was that big of a negative. For example, the yield on the 2-year U.S. Treasury note jumped 9 basis points. And we had some other good news. The fact that we didn't get a more lasting move into safety valves. In other words, not everybody ran to safety. But I think the important thing is to concentrate on some of the good news that we have here in the U.S.
How much of what happened last week was due to fears over China, and how much of it was kind of anticipation of what the Fed might do as far as interest rates?
Well, I think that as far as the Fed, again, they're rather unclear. So I kind of have to admit that the story that the Fed's annual symposium in Jackson Hole, what they were talking about back there was more inflation dynamics and the monetary policy. And I think the Fed seems split right now. But it is interesting to have seen, Atlanta Fed President Dennis Lockhart sound less sure about a September move on rates, and both Fed Vice Chair Stanley Fischer and New York Fed President William Dudley appear really non-committal. So I think more of it had to do with China and just the fact that there was that big drop that they had. And again, we are seeing a little bit of secure thinking now, I think, as we start this new week.
We saw those big drops, and that's what everybody focuses on, but we saw some huge gains last week. Obviously, a lot of people getting in there and buying, spending a lot of money, so there's somebody out there who feels good about the economy.
Well, in real terms, the consumer spending is on cyclical a high. It soared. In July, we saw items like durable goods up, clothing, restaurants, recreational goods and services, hotels and motels, and transportation. It's running at a red-hot 5% annual rate since February, so that's great news, and I think people saw that. They realized that underneath there's a good buying opportunity when stocks go on sale.
Okay, Jay Tyner, thanks for your time. Take care.
Bye-bye.
Well, after years of